Hi, everyone. Welcome to today's panel. I'm Kayvon Pirestani. I look after Coinbase's institutional business for the APAC region, based in Singapore and Tokyo. Pleasure to be here. Thank you, IVS crew, for inviting me. Let's go ahead and kick things off with quick introductions from everyone on the panel. Starting with you, Ben, from the end, and we'll move this direction. Please introduce yourself, your company, and your role within the institutional crypto ecosystem.
Okay, great. Thank you very much, and then thank you to IVS for inviting me. My name is Benjamin Tsai. I'm one of the co-founders and president of Wave Financial. We're an SEC-registered investment advisor, run about $1 billion of AUM. Our focus is blockchain cryptocurrencies. We do investments in the VC space, and NFT space, and the DeFi space, and we also have a wealth and treasury management business. So, we're quite involved with the institutions around the world. I spent a lot of time with Japan and Asia markets, along with the European markets.
Hey guys, this is Xin from EthSign. I'm the co-founder and CEO, and so at EthSign, actually, we're building non-financial applications based on Ethereum. We'll start with the e-signature product, and we're trying to connect legal contract to smart contract. So basically, we're using smart contract to execute the terms in legal contract, so don't really bother waiting for a law case or something. And also, the legal contract is compatible to the traditional world. It's readable for institutional investors. So I think it's a bridge between Web 2 and Web 3. And this year, we're also creating more scenarios based on these signature. We're starting to do capital management for Web3 project and DAOs for their tokens. Thank you.
Thanks for having me. This is Yijin from Amber Group. I'm the head of Japan at Amber. So Amber is a leading global finance firm with over 1,000 team members. Today we have traded over 1 trillion worth of crypto, and we have an AUM of over 5 billion. Also, we dominate roughly 2 to 3% of the global trading volume. In Japan, actually, we acquired the JFSA license exchange DeCurrent this February. So now I'm also operating the DeCurrent exchange. Thank you very much.
Okay, cool. This is Edward from Huobi Global. I'm currently the head of listing of Huobi Global. I think majority of you guys may know us. We operate the crypto exchange business since 2013. And since we used to be the biggest one in China market, but we removed the China market since last year. So currently, start from this year, we focus on the 100% focus on the global market expansion. So today is my great honor to be here to meet all the projects, investors, all the institutional partners to discuss about collaboration, especially for listing, asset collaborations, and all kinds of business development. Thanks.
Thank you, panelists. So today I want us to have a conversation, not a script, and so I'd really encourage all 4 panelists to jump in, provide alternative viewpoints, potentially disagree with each other, potentially take some risks here. I've been in the crypto space professionally for more than 5 years, and personally, since 2013. And I tell my friends and family, whether you love crypto or you hate crypto, one thing you probably can't deny is that crypto is probably one of the most entertaining industries in the entire world. And I think the current market environment really speaks to that. Winston Churchill, get my characters right. Winston Churchill once said, "You should never let a good crisis go to waste." And so in that spirit, I'd like to kick off today's conversation by talking about the current crypto crisis we're having. The past 6 months has been incredibly difficult for the industry, with key players, many of them going insolvent, and also obviously asset prices going into free fall. So I think the key question that I'd like to ask the panelists today is how the past 6 difficult months has impacted the long-term trends of institutional adoption that we've seen building up in crypto slowly over the past 4 or 5 years. So I'd like to hear from each of you what you're seeing institutional clients that you're talking to saying, what are they doing, and what is your perspective? What are you telling these institutional clients how they should be reacting to the current traumatic market conditions in crypto? And perhaps let's start off with you, Edward. and then we'll work our way down the panel.
Okay, thanks. That's a great topic. Everybody is suffering, already suffering from price since few months ago, but from exchange angle, we see a great opportunity. And personally, I'm a bullish guy for the crypto markets since 2018. And there's always thing we always say that during the bull market, everybody more focused on the trading side, but during the bear market, everybody more focused on the development side. So it's a great opportunity for every single institutions and a product team to build up your product, focus on your own developments. I think it's a great purpose. So that's the thing I usually share the opinion with all the people. And so that's why in the past 2 quarters, my team expands heavily, and we meet tens of thousands of projects, tens of hundreds of projects globally. We see a very good trend, very healthy trend to see a lot of newcomers join the crypto space. So personally, I think it's a great signal. Even price may still a bit low, but we see a very good trend in the future. We see a lot of Web2 companies enter the Web3 world. We see a lot of traditional institutions. They start to look at the space and start to bring money in, and we find more and more very high quality solid project founders, project teams. They start to build every single new innovation product and focus on blockchain. So it's a very good signal, which I see, and that's why my team and from our end is quite positive, and we always send out the positive signal to everyone, and we see it's great period of time for the production and development. Yeah.
So I think from a pure crypto perspective, the recent Luna crash and also the crypto credit crisis are not over, and there might be still some liquidations on the horizon. Along with we see Celsius work and so on, I think some major lenders in Asia has yet to announce their status of insolvency. Some of which are having a large client base in mining space. So if the miners cannot get the funds from the borrowers, they have to reduce their inventory as well as working capital. So that is number one bad signal for the short-term market. And also on the exchanges side, some tier 2 exchanges recently announced their insolvency, but rumors on others are yet to be confirmed. So it's still really ambiguous. Also for some trading desk as well as the lenders, for example, Genesis Trading, they just announced that they have some bad exposures with the counterparties, which can cause really huge loss. Actually, this will hinder those players from becoming the buying powers in the near term. And from a macro perspective, I think the QT, right, the quantitative tightening has begun last month. And there is already around $2.3 trillion drained from the market, and it's still growing at a tremendous speed. So I think that is impacting some traditional players from buying and holding cryptos as well. Also, recently, the trading desk at Amber has observed some on-chain data. For example, we noticed that there is roughly 1.4 million Bitcoin changed hand between the 17K and 21K level. And also, the long-term holder of Bitcoin has decreased by 180K Bitcoin. So that is a really bearish signal. And if you look at the technical indicators and other on-chain data, although there are some recent price bounces, like today there is success, and for another example, like last Friday, Japanese FSA also announced a loosen on the regulatory rules on the trust bank that they can provide crypto custody service. But other than that, all bearish signals. But for me personally, I believe it's a good time to start to buy some spot, or if you are a sophisticated traders, maybe you can buy some like calendar call spread, like you can for the short-term call options and long some long-term options. Yeah, that's from my side.
Yeah, honestly, I think the volatility of the huge volatility of crypto markets is actually very helpful. Help us to learn faster, right? We can see who's right or who's wrong, right? Those people who seems to be right in the bull market will die very quickly. So we understand better, and also the volatility also help us spread the message to the massive people, helping them understand, helping them formal to learn more about crypto. I think that's a good thing. And also I think the institutional money or family offices, they're actually smarter. They're always smarter, and that's why they're rich. And I think a lot of them start to buy and start to invest in VCs. We see VCs, especially like Andreessen Horowitz or a lot of other VCs, they lose huge money. So we can't really imagine like a multi-billion fund in last cycle. But right now it's happening. It's like a lot of VCs raise that amount of money. So I think overall it's very healthy. And also, as an entrepreneur perspective or as a builder perspective, we're actually building applications. So basically, in bull market, there's a competition of whose dream is bigger. So I have an application. I also want to build my own blockchain, and I want to build my whole ecosystem. Everything is within my ecosystem, so I deserve a higher valuation. So it's a competition of that. But you have to deliver. Right, and also you can't, for the founders, sometimes you can't really get the right feedback from the person, because like the VCs, they also want you to tell a bigger story. So they don't really give you a good feedback. But in bear market, everything back to normal. So they will tell you the truth. Say, hey, dude, you have a shitty product. Like your product doesn't really work, or there's a lot of bugs. Or like you're all the way driven by your idea, not like UX, and not really serve the users. Or a lot of users, they come to your application just for airdrop. They don't really like your product. They just do everything for airdrop. So you understand things better, and you really have time to improve. And also, I think for all the institutions, in bear market you can hire more people, but because in bull market everyone just want to do their own startups, so you basically can't hire. You can't really hire crypto people. So yeah, I think it's a good start of next bull run. Thank you.
Great. I agree with all the panelists here, so let me try to address some of the other areas that may be interesting from an institutional perspective. I spend a lot of time with institutions in the US and Europe and Asia also, and I think there is a fundamental shift in thinking compared to a few years ago, where there really is an interest in getting involved in blockchain, cryptocurrencies, and applying it and so forth. I was in Geneva a few weeks ago, and speaking with the private banks, I think people have gone from, crypto is just a fad to, yeah, I know I need to do crypto, but I don't know where to start, and I'm willing to consider it. So we're having real discussions on how they can provide their clients with exposure and so forth, and I think that's really exciting to me. It's a big difference from a few years ago when we approached them and they weren't really interested. In the US, I think, there was a general interest. I think that interest is slowing down a bit because of this big correction, so people are being more careful, but overall there is an understanding that crypto is to a certain extent inevitable, so they're just trying to decide on what the right timing is. And large institutions don't usually sign up on the way down, they usually sign up on the way up, so I think we have to wait for kind of the way up before that that signing up process would happen. I think Japan has always been a very unique market, and I spent the past 2 weeks actually in Tokyo and Osaka and meeting partners and institutions and so forth. There is a general interest from I don't want to make it sound negative, but from the second tier or the smaller financial institutions that are a lot more active in this space, and they are really looking at building, they're all pushing forward to try to do more in Japan, which to me is very exciting. I think someone mentioned the recent change in the trust laws to be able to have trusts hold crypto assets. I think that's going to be helpful. Right now, the tax situation is very difficult for holding crypto in Japan. We were just talking about this before coming on stage. For those of you that are not familiar, you pay taxes on mark-to-market gains, you pay taxes on protocols that issue tokens, pay taxes on that, and it just becomes extremely difficult because that doesn't get cashed out. I think there's a discussion, there's a push by some of the people who are actively involved on the regulation side to change that. I've been told maybe give it 6 months, give it a year, by the end of the year that could potentially improve. And that is actually one of the big points. And with that improvement, I think there would be a lot of interest there. Also, I think there is I don't know how to say it in the best way, but the institutional side, I think, is now starting to understand and starting to play into or towards the strength in Japan, which is really about the IP and so forth. So I was attending some of the other panels with regards to GameFi, about NFTs and so forth, and I think that's a space that Japan can be strong on. So I think that that's good. With regards to some of the other countries, I think there is a concern from people like us who are actively involved in crypto as to friendly jurisdictions and a change in the friendliness of the jurisdictions. We've kind of seen that happen. We were actually talking about this over dinner yesterday. We've seen countries open up and then closing down. The likes of Malta and Japan at one point was very crypto. They took significant steps back after certain exchange hacks, which is understandable. And then you see Singapore really opening up, but they're starting to slow down now. Dubai is opening up. Everybody's piling into Dubai. There's a concern as to whether Dubai will slow down or not. So there is that regulatory component that we all kind of keep an eye out for, and seeing where it's going to go next. So I think from that perspective, that's also a very interesting discussion also. So I'll stop there. I think there's many things we can talk about. So.
Thanks. You guys touched on some really interesting themes there. I'm somewhat not surprised to hear, for crypto natives painting a fairly constructive picture about, the difficult conditions we're currently in. But I also want to talk a little bit about, what have we learned from some of the mistakes, frankly, that I think we've made as an industry. One of the central roles that one of the central problems that we've been dealing with in the midst of the current crisis is the role of lenders, the role of leverage, right? What are we taking away from this? So, Yijin, I want to kick off this question to you, and the other panelists, please chime in after that. Amber is one of the players who operates a lending desk, right? What is your perspective on the role of the lenders and what's happened here? Is it just a function of poor risk management or lack of risk management, or is there something deeper going on here, right? Is it a lack of regulation that's allowing folks to do things they just shouldn't be doing? Is there something cultural about the crypto community where maybe we're taking risks with retail money that we ought not to be taking? What's your point of view on that?
Yeah, good question. I think it's always important to learn from the failure. But regarding the question, I think it's actually more of the risk management stuff, like how you segregate your client's fund with your company's own fund, like how you determine the market risk, like how you screen on your counterparty's risk. But other than that, I think after the Luna crash and the crypto credit crisis, I think people are now thinking of more ways to generate smarter and safer yield, and that's number one. And number two is that I think this is also about the liquidity, because if you pay STETH or the Grayscale BTC, for example, apparently now they're traded at discount, but a lot of companies and institutions are mispricing on the cost of liquidity on those tickers. Like, it's apparently that because they're cheaper than the spot of BTC or ETH right now, but if you conduct some delta neutral strategy on those tokens, it's basically a black hole of the liquidity. Yeah. And also, I think, I mean, in Japan, actually, kind of, the FSA has started to issue some licenses like 5 or 6 years ago, back in 2017. And after then, there were some hacks on the exchanges, but basically all of the exchanges in Japan are complying with the rule of user asset segregation. So they didn't touch on the user asset to do some risky activities. And also, but there are still some potential risk for the market. Like, for example, the lending services is emerging in Japan, but a lot of the service providers are non-licensed, and this area is not regulated in Japan and in manywhere in the world. So I think it's a good time for both the market players and the regulators to learn how to take the risk management seriously. Yeah, that's my point of view.
So I think your point of view, Yijin, is that it is about prudent risk management and that needs to be improved. Do we have any alternative viewpoints on the panel?
I'll jump in there and add a few things. I'm actually in agreement, and I'm a little on the fence with regards to whether regulators need to be involved for risk management to kick in. I'm actually very disappointed at certain players in our industry that have decided not to do risk management in order to gain. Just take, for example, Voyager. Voyager is a U.S. listed company. You would think as a listed company with auditors that they would do risk management. I mean, that sounds kind of obvious, but they didn't. They went to 3 Arrows with zero collateral, uncollateralized lending to a high return hedge fund, right? So the moment they blew up, there's no collateral to claim, and they went into bankruptcy, which is kind of obvious that was going to happen if there was ever going to be any issue. So I felt that was really just poor management on a listed company's part. And, they also, they used commingled client assets to do this, which made it extra worse. It's not regulatorily illegal to do it, but when it blows up, you go into bankruptcy. So I would have assumed a listed company would be, a bit better managed than that. So there's a certain level of disappointment. Separate from that, I do want to, kind of congratulate the crypto world in the sense that I think the DeFi world actually has done very well. And I'm going to separate, kind of the Terra Luna discussion separate from the rest of the DeFi world. I think DeFi has actually functioned properly in the past few months, even through this big deleveraging. There's no government bailout. It is deleveraging the way it was designed. There hasn't been any major liquidity issues, and things have actually, been, well handled, other than this little Solana thing that we don't have to talk about right now. But overall, I think that has come off really well. I think the Terra Luna issue is a separate issue. It's really about stablecoin and how do you back up a stablecoin, and that just wasn't designed correctly. So that's a story for another time. But, in terms of CeFi and DeFi, looking at the past 6 months, DeFi actually did extremely well compared to CeFi in the sense that none of the DeFi platforms are actually defaulted anyway. So,
Yeah, I really want to add on that point. That's actually what just happened is a perfect proof that DeFi is better. So if you want to control the risk, you just open the book. Just make the book transparent, right? So although I personally lose a lot of money in Luna, but you buy the token, right? So you understand the risk. But I also lose some money in some lending platforms. So they claim it's you have no risk. They have like a quant trading thing. It's market neutral, but they just take your money to do the leverage trading. So that's what's happening. So basically, DeFi, anyway, it show you the book. You know what these people are doing and at what price they will get liquidated. But you never know what's going to happen in like CeFis. So
it sounds like what you're saying is the transparency offered by DeFi allows investors to be better informed about the risks they're taking. And per your example, you can sometimes still go in, take the risk and lose your money, but at least then you only have yourself to blame, right?
Yes.
Yeah.
Yes, that exactly. I think transparency is better than, a group of regulators and they're separated in different jurisdictions. They don't work together. That's the worst case.
If you don't mind, I'll just add a small point to that. It won't take too long. We're professional asset managers, and I think for clients that don't actually want to manage their own exposure, that's where we come in. We have people that are watching this all the time. When Terra depegged down to 99.5, which is 50 basis points of loss, we pulled our client assets out of that. And so from that perspective, I think there is value in active management in the crypto space. And this was on a Saturday morning, too. So for what it's worth, I think that's something to consider. And it's between, you want to do it yourself or you want to have professionals do it for you. And I think both of those are acceptable solutions. And I'm not necessarily sure more regulations is going to, change that.
Thanks, guys. So let's shift gears slightly and talk about some of the other sectors of the crypto economy that have been impacted by the current crisis. I'm thinking of centralized exchanges. I'm also thinking of asset issuers, token projects, right? So we've heard noises about how some centralized exchanges have extended credit lines to the likes of Three Arrows and suffered losses off the back of that, right? And other token projects like Kayvon, who delegated some of their treasury management to Three Arrows again and suffered a loss. So Edward, I want to pose this question to you as a representative of Huobi, one of the largest centralized exchanges. Also, as the head of listings, you interact with probably all of the major asset issuers in the world. How have these centralized exchanges and the asset issuer community been impacted? And what are the learning points from the current crisis?
For the current market conditions, right, and all the crisis happens. Yeah, I mean, we did a lot of rounds of internal review and discussion. We did a lot of cases, even just like Xin Yan just mentioned. We also face some small challenge for the DeFi protocol because we have a DeFi mining team within the system. So we also put a lot of money into the DeFi protocols for mining, but we also face a small challenge. That's part of it. And another case which we face is, because for centralized exchanges, we also provide a cross margin lending, cross margin borrowings, and we usually we accept some kind of altcoin, small coins as collateral, and we provide the stable coin to our clients. But due to this market conditions, we also face a small challenge for some immediately a drop of the price, which make the collateral value drop to zero, which bring the loss to the platform, which will also face a small cases before. So that's all these kind of cases come to one point. It's just all the panelists just mentioned is the risk control. So under these conditions, for our centralized exchange operation, so risk control is the number one rule. Rather than you just do business, you do the growth. As an exchange operator since for 9 years, right? We go through 3 times of the circle, so we know what's happening now with the market. But if you cannot well control the risk, then you will lose money. Then the more money you can make. So that's the very important lesson we learned in the past two quarters. So that's number one. Number two, I agree with Yijin's point of view. So the regulation and how to manage your clients' assets is very important. As one of the most regulated, even we don't have license globally, but we have several licenses for some certain areas. We're one of the most regulated exchanges. We always treat the client assets very seriously, so we don't get in touch with any assets, clients' assets, if they don't allow us to do. So that's another principle which we follow for many years. So that's why we don't face any hacking issue or any, lending borrowing issue in the past years. So that's another lesson. It's a good lesson which we follow for the past few years, but that's also the point we want to share with you guys. So through strictly follow the regulation, no matter you have the license or no matter how people you work with the government, you have to operate your business healthy. Only by this way you can run it sustainably.
I agree on the point that Edward just drawn down here, because I was also working for Huobi for a while, and I know it's really, these days people are losing confidence on the CeFi platforms, but Huobi really has a really strong balance sheet. Also, I think, security, compliance, risk management, and transparencies are really crucial to the CeFi platform. I'm really happy to announce that we don't have any risk exposure on those who are encountering the insolvency problem recently, and we have never underwritten some risk of the borrowers, and we would never do that in the future. And also, back to the DeFi topic just now, I think DeFi, as one of the property transparency, it's much better than a CeFi platform, unless the platform is listed or audited by the government or trustworthy institution. But in Japan, because I have been in Japan for several years, and from the perspective of Japanese regulators, actually DeFi is a wormhole of the money laundering. So the most important, problem for DeFi is how you control that the funds on the protocol are all from the normal world. Yeah.
You said wormhole of money laundering?
Maybe for some protocols, because sometimes you cannot track all the on-chain records immediately. So there might be some chances that some suspicious transactions happening on DeFi protocol. And that is exactly what Japanese regulators are concerned about, not only for DeFi, but also for the stablecoin.
I think that is a completely different path. I don't even know if we want to go down that path in discussion, but a lot of the DeFi platforms are making an attempt to build kind of regulatory compliant DeFi platforms with AML KYC, with named wallets and so forth to try to improve that. There have been hybrid systems that have been built out also. Aave has the Aave Arc, or Aave Pro, or whatever the heck they're calling it now, that does that. Maple Finance does it for half. So they're hybrid, so the money in isn't being checked, but the borrowers are being checked. So there are different business models being explored. I don't know if any of those would fall within the bounds of Japanese regulation, so that's story for another time. But certainly, DeFi continues to evolve to be more mainstream.
I think, one of the criticisms that DeFi suffers from is that it's just a regulatory arb and very sophisticated packaging. But I guess the advent of these more regulated compliance services and the DeFi side, Ben, that you're speaking to right now, will allow us to test that hypothesis. If they're successful, then we can demonstrate they can add value, create the returns whilst being compliant, potentially.
Yeah, just to say in a less nice way, I think fintech is just, to a certain extent, a bit of an arbitrage of regulations, right? So,
Xin, I want to pose a question to you, and you're also a Huobi alum, so we have 3 Huobi alumni on the stage.
Thanks for right?
But I wanted to touch on, another community, which is the developers, also obviously some overlap with the asset issuers. If you can no longer outsource your treasury management to, a supposedly respected fund like 3 Arrows, what are you to do? What do you take away from that? And what are the alternatives for a token project that doesn't want to spend their time managing their token treasury?
Honestly, we always talk about this topic. But I always want to ask one question. It's like, where's the interest come from? Where's the interest come from, right? So my understanding, like,
Yield, right?
Yeah, where's the yield come from, right? So you have to learn, like, if the yield come from a Ponzi scheme or somewhere else. Like, as a developer, you raise money from investors, you make promises to investors. The last thing you want to see is like the money get hacked by some other scammers. So, and also has been in the crypto for many years. I see the beta is actually big enough. So my advice or my choice is like we don't do any yield farming or give money to any centralized yield generating financial product. We just keep it, and maybe at the right timing we will convert like no more than 1/3 of it to ETH, and that's my idea. Yeah.
So your idea is keep the treasury and the native token, convert some of it to ETH,
Yes.
but not convert anything to fiat.
Yeah, if you have to, right? So like take us as an example. We have employees in the States, in Singapore, so we have to pay them with fiat, right? So for some of them, they want fiat. So every time you allocate like the 1/10 or something to fiat, put them into the company and pay the salary, but not much. For the most of the money, we're still using those safe to manage it. So the community, the investors, they know what's happening. That's the idea for transparency. Yeah.
Okay, thank you.
Can I jump in there for a moment? I put the mic down because I thought we were going to talk about developers, but if we're talking treasury management, I'll jump in and kind of comment on it. We actually do treasury management for some of the top protocols out there, and the treasury management includes generating yield, but it's not just generating yield. We do a lot of different things on behalf of the protocols in terms of liquidation, in terms of converting from token to token, in terms of going to fiat, in terms of managing fiat, and we do this all in a structure that is segregated and segregated on their behalf. So the issues that Three Arrow has is not something I actually understand in terms of the commingled assets and the amount of risk that they've taken on some really exotic strategies, just because I don't think that's how we think about treasury management. So it's unfortunate that I think, Three Arrows has, made treasury management sound like a bad thing for protocols. Protocols, before we got involved, some of the protocols are actually not really properly managing their treasury. And I can understand that. A lot of the protocols are built by tech people who are very good at the tech side, but they've been handed a big pile of their own tokens and they didn't do much with it. There are tax issues, there's asset liability management. There are various different other things that I think they need to think about that they may or may not be equipped to do so. So we actually help with a lot of that, and I think there is real value to be added, not just from a yield generation perspective, but really from a treasury management, holistic perspective.
Really good point, Ben. Thank you. Let's.
By the way, just sorry, good. I think stake is STETH is a best choice for if you do want some yield. It's 2%, at least 2% annually, and that's a good choice if you believe in Ethereum. Yeah.
I love how you, Xin, and you earlier, Yijin, have specifically laid out trade ideas you guys like. You're not afraid to put your point of view on the line, so thank you for being very specific. Let's shift gears slightly and talk a little bit about the environment of institutional adoption in Japan specifically. And the reason I think this is so interesting is that in my role as head of APAC Institutional for Coinbase, Japan is one of many markets that I look at, and I'm always trying to assess the potential, thinking where should I deploy my resources, be it salespeople, account management, et cetera, amongst the different markets in the region. My point of view, having been doing this, for about 5 years or so at Coinbase, is frankly that in my mind, Japan doesn't seem to be a high potential market for institutional adoption due to a variety of factors around tax that was already mentioned, around some of the regulatory posture with the JFSA. I see Hong Kong, Singapore, up-and-coming markets like Australia as much more interesting. But I want to potentially question that point of view and ask the panelists. We have some experts here, right? So, Yijin, you told me in our conversation yesterday that you actually see some interesting developments in Japan, and you're building some of your business around that. And Ben, I know you have a point of view here as well. So Yijin, let's kick it off with you. What do you believe the institutional opportunity for crypto in Japan looks like?
The majority institutional players in Japan are actually the licensed exchanges. Although we have been building up the institutional business in Japan to cover the exchanges clients, the lending companies, token project, and some miners, but most of them are exchanges. And Japan has actually been the hub for the crypto trading. The now infamous Mt. Gox was founded in 2010 in Japan, and during 2013 and 14, they are handling over, I think, 70% of the Bitcoin transactions. Also for even for GameFi and NFT space, one of the sponsors for IVS here, like Bubblegum Tokyo, they actually built a crypto game called My Crypto Heroes back in 4 years ago. And once upon a time, the series of My Crypto Heroes NFT are dominating over 90% of the trading volume on OpenSea. That is the age that most of people don't know the word of GameFi and NFT. But later on, the GFSA introduced the WASP license, Virtual Asset Service Provider, in 2017. Although there are some hacks like on CoinCheck or Bitcoin Japan in the past several years, there are now over 30 licensed exchanges in Japan, and the majority of the users are the retail clients, because Japan has a unique market and they're providing the API-based pricing and fiat on-off-ramp. So most of the exchanges are seeking for the global liquidity as well. But on the contrary, I mean, some of the regulatory rules or the framework are lagging behind. Take Coinbase Japan, for example. I know that MUFG, one of the mega banks in Japan, was the early investor of Coinbase. However, Coinbase Japan nowadays cannot conduct the foreign remittance through MUFG, and I think that's ridiculous. And yeah, so right now, the regulators in Japan are actually the GFSA and GCEA, the Exchange Association. And according to the data from GCEA, there are over 5 million KYC users. And that is huge because given the background that the country's populations are around 120 million, it's roughly 4% of penetration. And I think there's still huge potential because on average, Japanese people are rich. They have a lot of money to invest, and the yen is being dumped recently allowed, and it's really hard to find high yield in the TradFi space in Japan. So I think crypto could be a good choice for the investors, both for the institution and for the individuals. But there is something that prevents them from investing more, and I think it's tax. So maybe Ben, you have any views on tax, because I think you can make some comment from different perspective.
Yeah, and I also want to, Yijin, you spent a lot of time talking about, crypto exchanges as quote-unquote institutions, but I just want to remind everyone that when I think of institutions, particularly in a huge country like Japan and their populace, I think of, some of the biggest pension funds in the world. I think of some of the largest asset managers in the world. I think of, huge and liquid ETF markets, right? And so my question for the panel is, I recognize there's some structural reasons for this, but when are we going to see those larger institutional players potentially getting involved in crypto directly?
I will try to answer that question indirectly. In the past 2 weeks, I went and spoke with a number of people, and the more established players within this space are actually now building custodians to try to service that space. I said, really? Why bother? Right, so I flat out said that to them, but their expectation is that those people will come. This country is more top down rather than bottom up, so it's going to be driven more by the sales guys got the sale done rather than there was client interest. But if the large institutions are building, there is an opportunity. And once again, it's because the sales guys will get it done. So from that perspective, I think it's good. One of the major barriers, as Yijin had mentioned, is the tax issue. Until that gets resolved, none of the institutions will come in. But once that point gets resolved, I think it'll be good. I think the target timing I was given is about 6 months, but I don't know how long that is actually going to take. So from an institutional perspective, in terms of the large institutions, pension money and so forth, I think that is the angle. The other part, on the retail side, I think, for those of you not familiar with the Japan financial markets, and I've spent a decade here, the financial markets has always been very high exposure. Japan has always had a very high exposure to foreign currencies. There's an interest, when I was in the traditional finance business, people were buying South African rand, people were buying Turkish lira, people were buying, these more exotic, Brazilian real. They're buying these high, interest currencies because they wanted a yield. And so for them to get into crypto, buy another currency for more yield is actually relatively natural for this country. And what's holding it back is the regulation and the taxes and so forth. If those get normalized to traditional finance standards, that actually will actually drive a lot of that money into that space. So that is actually something very exciting. With that said, I'm not sure with a country this size we need 30 licenses, and I know 2 out of the 5 panelists here are running exchanges here. I feel like there's a little bit of overcrowding of licenses here, and I don't know if a little consolidation, a little bit of cleanup may help the revenue of the remaining players.
3 of the panelists, actually. We had Decurrent, Amber, Huobi.
Right, sorry, 3 out of 5. That's,
But Edward, you've been a little bit quiet, and I want to make sure we get the whole
because it is my first day to be Japan. But I did learn a lot from them, and I'm quite positive here because we have Huobi Japan, and our team here operate for a couple of years, and they pass me a lot of positive signals. For the institution side, because currently I'm more focused on the asset product builders, so we see a lot of very high quality and solid teams who come from Japan. So that's why I'm here, and we can provide a full circle of support since start from a very early stage. We have incubator to cover the seed period for the product building. We have venture capitals. We have 3 funds. One 400 million funds focused on the Web3, 100 million funds focused on all kinds of core concept, and 200 million funds focused on the GameFi Metaverse side. So and also we have corporate exchanges. We can support listing and all kinds of program collaborations. Even you already listed with other exchanges. So that's the thing I think we can support it. And in the first half year, I think we list around 5 projects come from 5 Japan team projects on Huobi Global, and the quality is quite good. So that's why I'm positive here, and I want to learn more from you guys and also our panelists to see and how we can collaborate together with all the institution partners.
Yeah, I actually want to provide another perspective, because I heard you guys are always talking about cryptocurrencies. Like this is cryptocurrency as a hedge of inflation, but that's only part of the crypto. I think because right now we have NFTs, we have more way to help like app creators to earn more money. We have GameFi, right? We can have a more efficient way to help game developers to get more users or players. So I think that will really help institutions that are interested in crypto. Because the government worry about like you use cryptocurrency as a hedge, because they are token issuers. You're dumping their token, so they're worried about that. But if you're talking about you can create more job opportunities, or you can help it. I just want to share one story. So I talked to Samsung Nest, one intern in Samsung Nest. So they say Samsung Nest is actively investing in GameFi. I said, why? They said like because a lot of DeFi users in Southeast Asia, they call for iPhone. So they buy Samsung cell phones. So we invest in GameFi, and we put GameFi into Samsung cell phones so we can sell more cell phones. So that's the corporate perspective, right? So if there's more diverse topic in crypto, so more like a big corporation, they have more reason to invest in crypto, I think.
Yeah, it's a really good point. I can say that from Coinbase's perspective, for our global institutional business, it's been really gratifying to see how our conversations with institutional clients, back 2017, 2018, really revolved around specific assets like, hey, buy me some Bitcoin, I'm worried about inflation, or hey, can I get exposure to Ethereum? And now the conversations are much more broad-based about institutional clients getting broader capabilities to trade, to custody, to handle digital assets for all the reasons you just mentioned. So, good point. I want to shift gears slightly here, Ben, and take advantage of the fact that you're the only panelist who's traveled all the way from the U.S. to be with us. And I want to hear, and you touched on this a little bit earlier, but I want to hear your point of view on what you see in terms of U.S. institutional adoption trends, how U.S. institutional investors think about crypto, and how it's different from what you've encountered during your travels here in APAC.
I think that the U.S. has not really progressed that far. I think there is generally an interest to do more in the crypto space, and that really comes from the client side. The clients are interested. Family offices, high net worth clients are pushing their advisors to, have crypto capabilities. But on the institutional side, the capability hasn't really, kicked in that much. Just to, take an example, we opened an account with Fidelity Custody, I think 2.5 years ago, almost 3 years ago. And the discussion was that they started by supporting Bitcoin. They're going to support ETH soon. I think they're about to start supporting ETH soon. So, it's been 2.5 years, and it is only the second largest asset in crypto. So they're taking their dear time. And, I run a fund that is custody with them. And I said, great, can you put that fund on your WealthScape platform, which is the Fidelity platform that supports, RIAs, the independent wealth advisors. And the answer was, no, we don't support crypto. I said, but you do support crypto. We keep our crypto with you. You hold my crypto. And so internally, they're trying to work through that. They're progressing. They're going from a no to a maybe. So I'm still working with them, and hopefully we'll get to a yes at some point. But certainly, it's still going from that perspective. And this is with a firm that the CEO, whose family basically owns the firm, has said they're committed to crypto. Separate from that, we are seeing some of the medium level or the mid-range guys who are starting to get interested in doing more distribution. We're starting to see investment banks being formed and merging into other banks. I think AP Partners is now getting active. They merged with another firm to now provide banking services for the crypto space. There are a few banks that are now banking crypto clients, and like Signature Bank and Silver Lake and so forth. So I think we are Silvergate. So we were now seeing kind of that shift towards, acceptance at kind of the mid-tier, financial institutions, and hopefully, this crypto winter doesn't pull them back. And we're seeing something similar, as I mentioned before. I was in Switzerland. The top-tier guys are still not involved. The UBS, the Credit Suisse of the world are not involved. But the mid-tier guys that we went and visited are actually interested. And then the third-tier, more broker-dealerish type private banks are already out actively selling crypto derivatives, structured products, and so forth. So, we are kind of seeing the move, towards institutional. So, yeah, I think, give it a bit of time, and, I think there will be interest there more on the Europe and US side. And I think that speed of adoption is actually probably faster than Asia. I think Asia actually has not been that fast in terms of more of an institutional adoption. And, I think I'll stop there. So.
Thank you, Ben. Let's go ahead and wrap things up. We've just got a couple minutes left, and I want to do a quick lightning round. So I want each of you to spend no more than 30 seconds and tell the audience what is the one project, development, token, or any type of technology that you are really excited about. Let's start with you, Edward.
Yeah, for me, so for the current token projects, all kinds of way, all institution based.
Anything that's happening in the crypto world right now that helps you stay excited about being in this industry?
Let me think about the current. I went to Consensus 3 weeks ago. So we see a lot of new layer 1, layer 2 protocol come out. So a lot of new projects which they can cover more user cases, have better performance and a more stable performance, and may bring some new innovation and new stream to the whole industry. Not the current layer 1, layer 2 protocols which we are discussing, like NEA, Solana, Avalanche, or maybe others. We see some new players coming. This kind of they provide a very solid technology which we see is quite interesting. So that's why we are proactively support them to see what happens in the quarter 3 and quarter 4, maybe in the next year. So that will be technology interesting. Layer 1, layer 2 products, new ones. Yeah.
Thanks, everybody.
Our posts, maybe most came from Facebook, other ones Mistons, and other strong players who be very actively, like Avalanche, they are launching their subnet. So the structure is quite interesting. So this kind of technology which can build up, to make the whole infrastructure more solid and more efficient, that's the thing we see. And from a centralized perspective, we're always trying to bring the best asset to all the clients and partners. So with this one, they may have a lot of potential.
Yeah. Thanks, Edward. Yijin?
Actually, I have two answers in my mind. The first is Metaverse, and the second is DID, also known as Decentralized ID, because I have been spending a lot of time looking at the Metaverse project recently, because our company Amber is also building a Metaverse service called Openverse, which will be available very soon. And I mean, everybody may have different definitions in terms of metaverse, but what we are building is we have different islands, and on each island there is unique theme, and you can nevertheless, you are a game lover, or you are a fan of some celebrities. You can find the people who share the same interest with you. And for the DID side, I think after the breakout of the pandemic, people getting to know crypto, people getting to know the importance of spending time online. So in the future, it's really crucial to increase the privacy and the easiness of using the decentralized protocol. So I think the DID will eventually become infrastructure for Web3 world.
You guys are building Metaverse?
Yeah.
Okay, so I have two. So first one is about the global market. So I think NASDAQ is now a very good global market. And right now token projects or crypto exchanges are building a real global market for everyone to have access to the market. The second one is like collective, the idea of a collective ownership, right? We can directly own something. We don't really get rid of all the middlemen, get rid of all the investment bankers. So that's all. Thank you.
Final thoughts?
Sure, yeah, and I think I'll just restate what I was talking about before. I'm excited by the fact that a lot of the distributors, really the people who are involved in financial products, are now looking at crypto as a mainstream thing. As they gain adoption, we're going to have much more mainstream capital coming into the space, which I think would make it very exciting. I think it's one thing to have kind of the crypto rich punting crypto around, but it's another thing to have kind of mass adoption, at least on the high net worth side, which would really build this market out.
Yeah, I think I have another one I think is quite interesting. So it's called all kinds of, consumer layer application, which can help the industry to adopt more new users to join us. So that'd be a very exciting topic, which we see in past months, like, Steppen, and also we know a few top game builders. They will bring 3A level or real 3A level GameFi projects we launched in a very short time. So that would be the high quality which we see. It's not just earn to play or play to earn. It's just to play the game just to make money. It's just to bring some high quality engagement, deep engagement game, which 3A level, which help the industry to bring all the new real users to the industry. But that'll be the part really exciting as well. Yeah.
Thank you, and thanks everyone on the panel. We need to wrap things up here. I appreciate the audience, your time as well. Thanks, everyone.